I wonder, Tiffany, we'll start with you, what your intuition, what your gut is telling you about whether or not this sell-off is over and whether there is any kind of capitulation anywhere in sight.
Well, that's the question, Don, right? Good morning. I think we're talking about the sell-off. Of course, we're talking about the market's reaction to the Fed still. And we can't talk about the Fed without talking about, of course, inflation coming down. And it's hard to talk about inflation coming down without talking about real income growth. And so what that is, just for the audience, is how much money an individual makes after adjusted for inflation. So getting back to this idea of a soft landing, right? So if the Fed is able to do that, we hope that that kind of reflects in the markets. And a soft landing is going to require the Fed to slow GDP growth carefully. And so, again, 68% of GDP is consumer spending. We know that. So spending is going to have to slow down. And historically, the main driver for spending growth has been real income growth. So currently, we still have solid wage growth. We're still adding jobs, right, comparatively speaking. And so there's no reason to think this is going to slow down significantly this year. So the Fed will likely have to continue hiking rates, and I think more than what the market has already baked in, what people are really expecting. So I think that this is going to continue.
All right. So, Chuck, in this kind of a situation, we have a lot of differing views about whether or not we're going to retest the lows again, whether new lows are going to be made. I wonder if this is an environment still where you are putting money to work. And if so, what kind of opportunities are you seeing in a market that's already down as much as it has been over the course of the last 6 to 9 months?
Well, it's been a stock-by-stock market. It's even hard to invest in any particular sector. So, for instance, you were just talking about the consumer area, and we actually like TJX, for instance. They have the treasure hunt experience in their 3 brands, TJ Maxx, Marshalls, and Home Good. And with the recession, they're getting a chance to pick from bloated industries of inventories of other retailers. And this has allowed them to have a great selection, especially going into the holiday season. And so the PEs are below the 5 years averages. And so a stock like TGX is one that we are adding to our portfolios.
Okay. Tiffany, I wonder if you're taking a look at that kind of an economic or market thesis, are you playing the same way, or are you looking in other areas of maybe even like the beaten up tech sector where there may be bargains out there, maybe being the operative words?
Yeah, so, Chuck calls it stock by stock market, and we really call it selectively adding equities. And we've been doing that all year. We're always selective about our equities. But for us, it's always about balance sheets and business models. But when you think about, we're really talking about these how investors react in the short term, these tactical shifts in a portfolio. And so the question is, where do you go, right? Because it's becoming harder and harder to kind of make those decisions about tactical shifts. It's really becoming a labyrinth, if you will. And we're adding equities selectively. So defensives actually are doing well right now. But we also like to invest in themes. And so I talked about theme last time I was on the show. And so, we like emerging markets. We like digital transformation. We like e-commerce. There are a couple of things that we like, but it's really, investors have to be very, very careful, especially when it comes to something like EM. You're not going to invest in EM in an index. We don't recommend that. China has a very, has this no tolerance policy, zero tolerance policy for COVID. Not going to do Russia. So where do you go, right? So selectively, you've got to really be careful about what's going to really help your portfolio in the short term.
Okay, Chuck, last word to you here. Are you worried about a recession?
Yes, we think that a recession is likely. The Fed has been tightening, and global banks across the world have been tightening. And this eventually will lead to economic slowdown. And given how much tightening there has been, we think we're just starting to see the effects of that tightening. And so we expect there to be a slowdown into a recession going into much of 2023.